Good morning, trading world. The title of today's pre-market outlook is Planning for the Cycle. I've talked a little bit over the last couple of days about how I look at things, the swing highs and swing lows, and how they add up or where they fall in trends, and how all this lines up in cycles. So yesterday I came into the session looking for a bounce to buy. However, at the open, the metrics, the breadth were still pointing to short entries. So I didn't fight the tape. I got short early in the futures market. I got my goal early, and I didn't wait around to try and capture the bounce. We did get a bounce later in the day. Also, yesterday I said the 4-hour time frame is bottoming. However, the daily is just at or after peaking, which means I won't be holding longs long at all. In fact, this bounce should lead almost directly into a short position. I still feel the same way today. A pop today will lead directly to another short. I only feel comfortable holding longs intraday, but I am willing to hold shorts for the duration. Right now, the cycles are lining up for a big spiel. The mini or 4-hour cycle that I follow, its expected trough is between February 24th and March 4th. The daily cycle expected trough that I follow is between February 28th and March 8th. The weekly cycles trough that I follow is expected between March 1st and April 15th. Now, the more, the overlapping of cycle troughs represent a big dip coming to me. So these pops up are great shorting opportunities. However, again, remember what I said yesterday, when things set up on the daily and weekly chart, it takes forever to play out. So you have to have far expirations if you're planning to capture this with options like I am. So remember, if I, setups on the daily chart may take 6 to 8 weeks to play out. So from the moment I usually get a sell signal on the daily, I have to think from the time that I enter that position, I have to have enough time in that option to wait 6 to 8 weeks for it to play out. And it's even longer on the weekly chart time frame. And as of right now, I still have a sell signal on the daily. I no longer have that buy signal on the 4-hour. However, I do have a buy signal on the hourly, which means to me that we're still going to get a quick pop up, but we're rolling over sometime soon after. So that's how I look at things. Today, just like yesterday, I will be leaning heavily on the metrics and following my entry signals, even though I am looking for a likely bounce again today. The more we stay above the 50-67 area, the more the bulls are temporarily in control. And below the 50-67 area, bears are in control. Matter of fact, let's bring up, let me put up the intraday levels today. Okay, now that I have the intraday levels up, we can kind of go through what the day will possibly look like. One thing we have to remember today, we have a GDP report at 8:30 a.m. and so that could kind of reset or knock the legs from under the run-up that started this morning. So looking at things on the resistance side first, again, this line right here, this is kind of like the Maginot line for the day. The 50-67 area, the more we stay above that, the longer we stay above it, the more the bulls are in control for the day. Below 50-67, the more the bears are in control. So at 8:30, we could get knocked back down. We could kind of go sideways until about the 8:30 area, where we could possibly get knocked back down and possibly even travel up under that area for the day. And then we could get a boost up. And actually, let me take a quick look. Yeah, so we could start off going back down, but at some point, I talk about these reaction areas. Reaction levels, they're not quite support and resistance, because these are the Jack, Queen, and Queen, the Jack, Queen, and King support levels or zones, and there are levels within the zones that I use as reaction areas. These are where I want to take entries at because I'm looking for a reaction. One of those levels on the one of those levels I'm going to be looking at today is going to be 50-67. So if we get down to the 50-67, that's a buy entry for me, because I'm looking for a reaction of at least 2 points. So we should come down, hit that level, and we should kind of chop or at least push up 2 points as a reaction to that level. And just because I'm looking for a reaction on that level doesn't mean that we actually take off, but I'm looking for just that, a reaction long enough for me to get an entry, see what it does. If it pops up 2 points and stalls out, then take the 2 points and run. Otherwise, this is where that turnaround could take place and things could kind of build and we start to push back up from a reaction point. So my long side reaction points are 50-67, 50-63, and 50-57 today. On the short side, those reaction points are 50-77, 50-82, and 50-90. So these are places within the zones that I have to look to for reaction or entry points when everything lines up. But at some point here, we're going to get that pop up and we're going to go and start a run up based on one of those reaction points and possibly make it all the way to 50-83, and that King resistance zone expands all the way up to 50-86, even though one of the reaction points I'm looking at is 50-90. So we can hit up there, and then after hours we can even get a little more push up, but I look for something like this to take place after hours. So that's kind of how I see the day, one way that I see the day kind of starting off. It could indeed go another way, which is the day structure of rounded. The day structure that I talk about is the rounded reversal day structure. And that's if for some reason we don't get the reaction to the GDP, we could kind of gap up and start pushing up on the day pretty strongly and hit an area and at some point level out, and then we get a nice tumble during the session as well. So those are the two things or two ways that I see the day playing out. How I'll be looking. Again, I'm leaning heavily on the breadth and metrics that I look at for entries, and on a day like yesterday, and I'm thinking today is going to play out similarly because the tape is going to be slow. In those days, although it's a little boring, they're much easier to trade when the tape is moving slow like it did yesterday. You can kind of set up and see things coming. So that's what I see for today. So a bounce up here is definitely a great opportunity to get short, even for a longer swing play, or at least until Friday. But I'm definitely looking for places to get short for the duration through the daily cycle trough. So remember, your most important job as a trader is to protect the capital that you already have. You do this by knowing and understanding the risk that you face in each position and in current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.